Hey traders, David Frost, My Strategic Forecast, here for another episode of Common Sense Market Analysis. Today is Wednesday, March 6, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got a few things to talk about today. Number one, we're going to talk about the trend line. And why are we talking about the trend line? Because today we got more confirmation once again that that trend line is something of consequence. It is important, so those that choose to ignore the trend line do so at your own peril. We can even go down to an intraday chart and you can see here that the trend line was in fact bona fide resistance today. Market was absolutely and summarily rejected at the trend line, at a retest of the trend line from underneath. Now that we got that out of the way, what else do we have? We have a market that's in an uptrend. We had one of those one-day wonder type of pullback situations. We had some follow-through today to the trend line, and while she did finish up on the day, still yet quite a bit off the highs of earlier today at said trend line. What's the takeaway? What do we make out of the daily chart when you clear up some of the noise? You say, well, they're just grinding upward. They're in a melt-up situation. It is an uptrend. Pullbacks happen in an uptrend. And our evidence is this. We have a pullback here. We have a pullback here, one day. We have a pullback here, one day. We have a pullback here, one day. Had one more in here. This is about a day and a half, give or take. So you could see the trend. The trend is they have shallow pullbacks and then resume the uptrend. What's that blue line on top? 516.65. If they were to make a new high, that becomes the next, at minimum, of intraday target. It's just a formula-driven way to come up with the next target at new highs. First, of course, they have to recapture the trend line. Other than some of the intraday stuff, there's not much more to address on the daily chart of the S&P. Nothing going on the weekly chart. We're halfway through the week, a little more than halfway through the week, and they're just hanging around. There's been no significant rejection. They hit the trend line, they popped over the trend line, they came down away from the trend line a little bit, and they're hanging around just below the trend line. That's what the weekly chart says. She's above all the moving averages. Obviously, the trend is your friend until your crap gets thrown out the window, but we will note that she is a little bit extended from home base. When markets get extended from home base is the 20-period moving average, she has a tendency to come back to pay a visit to home base, or at least go sideways, which by itself is a corrective pattern in time, not necessarily price. Time and price. Time is more important than price. If time corrects sideways, then she's building energy for another move higher. As price would begin to move sideways, it would give the 20-period moving average, in this case, this is a hypothetical, it would give the 20-period moving average a chance to creep up toward price as price was moving sideways. In this case, off the weekly chart, we're not going to expect 5 or 6 weeks of sideways activity from here. That's the unlikely scenario. I discuss a lot, specifically in the live room, but it goes across the board, inside the numbers, lazy swing trader, the live room, whatever it is, we've got something for everybody. Some traders prefer long trades only. Some traders like short trades. Some traders like only day trades. Some traders like only swing trades. Some traders like a combination. And therefore, we've got something for everybody. Case in point, this is out of the Automagical Lazy Swing Trader Algo system. We entered Devon Energy, 42.05. The exit was 45.46. That represents roughly 13%. Touch more than that. That was exit number one. It is now a risk-free, emotionless trade. This is what we call nice trade. This one we took profit today. And in the spirit of something for everybody, here is H&R Schlock. This was a short trade, 50.97. It was entered on Monday, exited today, quick profit. Now a risk-free, emotionless trade. And that's what we do. We pile up the base hits. Some turn into doubles, triples, home runs, Whopper Juniors, Whopper with cheese. Base hits put you in the Hall of Fame. Lazy swing trader, automagical algo system. Now, what happened inside the numbers and in the live room today? I think this one deserves a little bit of a closer look. We have a bounce back retracement situation from yesterday's decline. It's hard to kill a bull. As for today's numbers, we'll start with our early pivot. Mind you, this is at 0 dark 30 before most people even put on the coffee. Early pivot comes in at 508.45. We think better in pictures. You could already see where this one's going. Right of the vertical is today's activity. And you can see right here, we caught the low of day. We had a rocket ride right back up to the trend line. We had plenty of traders make buku bucks on that purchase. And that is a trader term, buku bucks. We had a whole truckload of people in this trade from the live room and inside the numbers. Hit it to the nose, no heat. They spiked it by 2 or 3 cents, took right off back to the trend line. Nice trade. And we have some numbers in between here above. And what happens? The trend line comes in around 512, give or take today. So guess what? High of day today comes in at what? 512.07. Funny how that works, a la the trend line. Now keep in mind, you were up here at the trend line, and what was right above that trend line? You had a gap. The official closing of the gap was 512.17. Sorry, 512.25. They hit the trend line, but they chose not to go fill the gap. How do we know? It's funny how that works. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. Everything traders need as a tour guide through the markets. Now, some of the further pre-market notes, we're talking about 510.70. Why 510.70? Well, let's go find out. In fact, let's see what happens right around the opening bell. 510.70 is overhead resistance. It's a big-time breakdown candle high. What do we know that happens most of the time? The large majority of the time at those places. First time, best time. Unlikely the market's going to waltz right on through a big-time breakdown candle high. This one was at 510.70. You see her on the left, 510.70. They spiked it. Did we have traders that rode the trade short from 510.70 all the way down and flipped it and reversed the trade? Yes, we did. Maybe not rode it all the way down, but certainly had a short, flipped it at the long, rode it back up. It's what we call a double barrel trade, and we had a bonanza in the live room today. I can assure you of that. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. What I did was highlight the important stuff. You saw what we're doing. You see the numbers on the board. They're on the board before the opening bell. What more could you be asking for? What about stocks on the move today? We had ROST, we had Nordstrom, JWN, and we had Foot Locker. Let's take a look at those 3 charts. We had Ross Stores that opened a few pennies below the number, took off like a bat out of hell. Technically speaking, opens below the number. That number's off the table. Yet we did have some traders in the live room that participated in the rocket ride to go back and fill the gap left open from yesterday. So officially a no dice, but we did have some participants in Ross Stores. Never know which ones are going to give you the quick rocket ride. Nordstrom opened above the first number, came into it and the second number, bounced back to the first. Technically, they gave you the base hit, but it was a bunt for base hit nonetheless. That's okay. We'll take another base hit. Pad the numbers. We look at the good, the bad, and the ugly. FL or Foot Locker is the ugly. It was a crap sandwich, shit burger. Didn't work. The numbers were wrong. Cut through everything. It was stopped out. It is what it is. These things do happen. We don't win every trade, but we do recognize and look at the good, the bad, and the ugly. We're not hiding behind just the winning trades. We stand right in front of everything. What's going on over in Camp IWM? Any material change? No, it's an up day. They're in an uptrend. Nothing's changed. Nothing changed from yesterday to today other than they were up $1.50 higher than yesterday. Put it in perspective, clear up the intraday noise, the daily noise. What does the weekly chart tell you? They're trying to grind up to the next place. They're working on eclipsing this high from December. They're working on it. Got it last week. This week, they're above it. They're below it. We'll see where the week closes. They're a little bit extended from home base. Home base is the 20-period moving average. But on the daily chart, not so much. No extension from home base. They're just grinding in an upward fashion. Take it at face value. What about the folks down at the transportation department? My second favorite market leading indicator next to the IWM, a number one canary in the coal mine. Couldn't really get anything going today. Tried to run into and eclipse the convergence of the 50 and 20 period moving average. And guess what? They were summarily rejected. Really didn't finish that great on the day. Is it a canary? We're going to use yesterday's low as a short-term bogey. Below yesterday's low, and it opens the door down to the lows from last week or a couple of weeks ago and these moving averages. We'll see if they hold. As far as the weekly chart is concerned, as long as they stay above all the moving averages, the trend is your friend and there's nothing wrong with the transports. You take a look at this box over here, and this is just a chop shop formation in a bullish pattern above all the moving averages, building energy to make another leg higher and challenge the highs from last summer. That's what's going on at face value. What about the Q people? As long as they hold the moving averages, she's good. She's grinding up. There's no problem. Drop below the moving averages, and you get into no man's land, and there's a gap to be filled down here about 5.25.5, 4.25.5. Anything wrong with the weekly? Nope, just a little bit extended from home base like all the others. She can come down toward home base, run some sideways action, eat some time off the clock. And what we do know is if the daily chart gives up the 20-period moving average, then she's likely starting to come down, and you'll see the 20-period moving average on the weekly chart come into view rather quickly. About the financials, if there's nothing wrong with the financials, there's nothing wrong with the market, nothing wrong with the financials on the sell-off day. That should have been somewhat of a tell, hint, clue, piece of evidence, all that stuff. Put that on a sticky note. They're trying to work on 40.80. That is the next target. They've been above 40.10 ever since they got there. We'll see what's above 40.80 on the next go-around if, in fact, they do get there and eclipse it. Just to put it in perspective, here's a monthly chart. You see what they're doing. They're approaching the highs from January of 2022. They're not there yet. They're pretty darn close. Are they back up here to fail, or are they back up here to bust through and make a new high? Time will tell. What about Smash Mount, the Philadelphia Semiconductor Index? Anything wrong here? Nope. Another new high today. They didn't close at a new high. They made a new high. This is a grind-up situation. It's a melt-up situation. They're extended from home base or the 20-period moving average, and that will resolve itself. There is no rule that says they can't go higher first, but they will come back down toward home base and work off some of the overcooked situation. Almost forgot about this one. We traded Tesla in the live room today. Where? 175. They spiked it down about $1 or so, and then they had a rip-roaring rocket ride back in the other direction. And what I told, well, it wasn't such a rocket ride. It was $5. But what I told traders in the live room was, here are the progression of events. I gave them 3 numbers, and I said, they'll get you to 180. What was the high of day? High in this candle was exactly 180.07. Funny how that works. Definitely had participants in the live room in Tesla today, and that reverts back to something we talked about before. There's something for everybody. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.